Combine both BTCI with QQQI and SPYI for the best monthly dividend ETF portfolio. Investors, yes, BTCI, the NEOS Bitcoin High Income ETF, is one of the best monthly dividend ETFs if you love both Bitcoin and a super high juicy monthly dividend of about 30% yield. Now, if you love both QQQI and SPYI by NEOS, then you're going to love BTCI because it has that super high yield from the more implied volatility on Bitcoin, and in my opinion, better upside potential than both QQQI and SPYI, which is why if you pair both of those two ETFs with BTCI, you could have a great 3-fund ETF portfolio by NEOS. Now, in this video, I interviewed the co-founder and managing partner of NEOS Investments, Mr. Troy Cates, where myself and Troy provide you a full and complete ETF review of BTCI, one of their best monthly dividend ETFs. We go over the pros, the cons, the review of it, why Bitcoin is great, the dividends, the expense ratio, the future and sustainability of BTCI, and why it's a great ETF to pair with NEOS' famous products of SPYI and as well as QQQI. As always, guys, our ETF Academy members, a part of our ETF Academy membership tier on YouTube, which is right here in the link in the description of this video and in the pinned comment section, I'll ask these questions, only a part of our ETF Academy membership tier in our CEO tier and above, where all of our ETF Academy private members, a part of our YouTube memberships, get all of their questions to ETF companies, interviews answered first. Our ETF Academy members, a part of our CEO tier, also get one weekly newsletter that basically will tell you all the private behind the scenes information of what's going on in the ETF industry, and for you to get all your answers and all your information answered first about any ETF issuer, from YieldMax to NEOS and so much more. It's super, super cool, and all of our ETF Academy members love this tier. Now, please, if you will, welcome Mr. Troy Cates from NEOS Investments.
Well, first of all, thanks for having me. I was looking forward to coming back and chatting about ETFs more with you. Feeling good. It's been an interesting year. I think we've had an interesting first half of the year between the volatility that's picked up back in the marketplace, which can be good for products like this, bring in more income or be able to write calls further out of the money. But it's been an exciting year for us. Firm's grown. We have now 12 ETFs out in the marketplace. We're coming up on our 3-year track record for our oldest 3 ETFs, SPYI, BNDI, and CSHI. So really exciting stuff going on.
First question for you, Troy, about BTCI is what made NEOS launch this product of BTCI, and why should investors be excited to invest in a product like BTCI that provides both high monthly income and exposure to Bitcoin, which is becoming, I guess, the main trend for investors to have Bitcoin exposure?
That's a great question. I think if you think about NEOS and what we're trying to do, we really look at ourselves as more of a solutions provider. We're not trying to say you need to invest in this product or that product. We're saying if you're looking in the income space, look at NEOS, because we have equity products, we have hedged equity now, we have fixed income products, and now we have this alternatives. And the alternatives for us started with the Bitcoin product, BTCI. And we really wanted to get a product out there that could give you that exposure to Bitcoin and could also provide nice monthly distribution for you while you're holding this Bitcoin. I think a lot of people we talk to were thinking about it. There's plenty of people out there that were early adopters to Bitcoin, but now that it's gone 90, 100,000, people are looking at either their portfolio or talking to their advisors, and they're saying, why don't I own Bitcoin? And then they're saying, well, when do I buy it? Is it too expensive now? And so I think BTCI gives them a way into owning Bitcoin without really thinking about, I want to pick it at this level, and maybe I'll sell it down the road at this level, and that'll be my profit. They could buy it, they could average in, and while they're owning it, they could earn a nice monthly distribution off of it. So for us, it's a really nice way to earn income off the volatility of Bitcoin while still having that underlying exposure and be able to get, participate in the upside of Bitcoin.
So the main investment objective of BTCI is to provide monthly income first, hopefully high monthly income, and then is it exposure to the underlying asset, which is Bitcoin?
Yeah, so we want to make sure, all of our products are income products. We want to make sure we're putting out a nice distribution that works with not only the total return of what Bitcoin could potentially do in a year, but what comes off of the volatility of the options market from Bitcoin. So we really want to make sure that we're not over distributing or say writing too many calls on the portfolio so that you're not really participating in those bigger months or bigger periods when Bitcoin's moving higher. So we really want to make sure we have a good mix of upside participation, price appreciation, total return, and of course the distribution.
So, how does BTCI generate that high monthly income? Because Bitcoin, of course, does not pay a dividend. And I really want to say that I like how BTCI lets investors participate more in the upside. Maybe they might be sacrificing less income because BTCI has been performing quite phenomenally in the last year to date compared to just a regular Bitcoin ETF. But let's get back to our question on how BTCI generates that high monthly income for investors.
Sure. So if you think about how it works, we'll go through the mechanics of it. To get that long exposure to Bitcoin, we do that two ways. First way, we hold one of those ETPs in the market. Right now, we hold HODL, and those are 33 Act funds, they're ETPs. And within an ETF structure, which we are BTCI, you can only hold up to a 25% position in one of those ETPs. So we have that 25% position. And then to get the other 75% or so long exposure, we do that synthetically with options. We trade the SIBO Bitcoin US ETF index options, and those are listed options. Those tickers are CBTX or MBTX for the mini, and we trade both. And that we will do a synthetic long, where we're buying a call, we're selling a put, same expiry, same strike, and that gives you a delta one position to the underlying index, and that index is tracking Bitcoin. So if that index that's tracking Bitcoin goes up 1%, our synthetic long should go up 1% and vice versa. So the idea is, how do you get that delta one position that can, follow the price of Bitcoin? So that's the two ways we get the long position. To get the short, short calls, we're selling those index calls on a monthly basis. Duration's a little longer, and we're bringing in income. One of the products that, one of the ways our models work is it looks at the volatility of Bitcoin, the rate of change of volatility of Bitcoin, and a few other factors to decide on a monthly basis when we're rolling how far out of the money the short call should be. And also, more importantly, how much of the notional should it cover? Because those two things decide how much of a distribution we can make, how much income came off of those short calls, how much premium did we earn, and then we distribute that out. And so the idea is, if we can cover less of the portfolio, then we're hopefully can participate with more of the upside if the market for Bitcoin does move higher. To give you an example, right now we're about 50% covered, meaning half of the portfolio is not covered by short calls. So if we have a big rally and we rallied, say, through those short strikes in the calls, we could still participate. BTCI could still participate on the upside.
For the current distribution yield, what is it right now? Because I'm seeing on Seeking Alpha about 20%, and then on your guys' website, it's about 30%. So I just want to ask, what's the current yield right now? And if Neos is targeting a certain yield for this income product.
Sure. So we just had our distribution a couple of days ago. The fund went ex-div, and the distribution, if on an annualized basis, was just over 28%, like 28.5%, I believe, and was as high as 30 last month. But that again can change with the volatility of Bitcoin and what kind of premium we bring in from those short calls. So it's just in that 28% range. The goal for this product is the 25 to 30% range is where we'd like to be, and what we think the products can support.
A big question for these high income products, especially on Bitcoin, is how sustainable is the monthly income going to be for investors? Because sustainability is a super big concern long term, maybe not with Neo's products, but with other products in the market that do this sort of strategy on MSTR, for example, or maybe even Bitcoin. So, my question for you is, should sustainability be a big concern for investors with BTCI for income specifically?
I think when you're looking at income, we always try to give a range of where we think the products can support a distribution. So for Bitcoin, for BTCI, we're in that 25 to 30% range. And we feel comfortable there because we're hitting that target while covering very little, half of the portfolio technically. And the model, if we get to a point where Bitcoin vol comes down and we have to go to 55 or 60% coverage to get in that same 25 to 30% range, it can do that. So given that Bitcoin volatility is inherently way more than S&P 500, the VIX, or even the NASDAQ 100 or Russell 2000 volatility, I think we have a long way to go before the vol would really come down to levels that we're seeing more in the equity markets, just because of, while Bitcoin's been around for a while, it still is a newer concept, a newer product, a newer way to invest. And so I think the volatility should be there for a long time. And yes, when we look at all of our products, like I said, we kind of give a range of where we think over time the product should be able to support that distribution. And you can kind of see it across our suite that their distributions are fairly steady in each different fund.
So, what type of investor is BTCI for? Is it a higher risk investor, somebody who wants monthly income? Is it somebody who wants exposure and loves Bitcoin and wants to throw in BTCI because maybe they're late in the game for Bitcoin and they could get income as a return versus just betting on the upside performance of the underlying asset, which is Bitcoin?
Honestly, I think it could be possibly for all the above. I think when we launched the product, we knew we wanted to get this product out in the marketplace. We knew we wanted to have this alternative sleeve at Neos. And when we were first talking to investors, a lot of it came through direct from retail. People that were already buying Bitcoin were looking for income, new Neos possibly. And then we started to talk to more and more of the advisor community that had clients that had never touched Bitcoin before. And they saw it go from 30,000 to 50 to 70,000, and they didn't want anything to do with it. And now 90, 100,000, they're saying, wait, why am I not involved in Bitcoin? So then it's like, yes, are they late to the game? Maybe late to the game and thinking, yes, I missed it at 1,000, but will it go further? And that's anyone's guess. So I think a product like ours, they're looking at it saying, I could have some exposure to Bitcoin. I could earn a nice distribution while holding this. And then if Bitcoin does go from 100 to wherever and continue to move higher, I could participate with that upside. So I think that's where it's really kind of gotten some traction in a lot of people, obviously the early adopters, but also people thinking I should get involved in this and I could earn some income while I'm holding it.
Do you have any quick thoughts on Bitcoin for yourself and just as an asset in general?
As an asset in general, I mean, it's one of, I hold all of my products, but it's one of my larger holdings, not the largest that I have, but I do like it a lot. I think it should be, in my personal view, for what works for my portfolio. I wanted it to be a good percentage of the portfolio because I look at it that I have many years of investing left. And that's different for everybody. It's always hard to tell people what they should or shouldn't invest in. And that's not my role. That's why we kind of look at it as we provide all these solutions, and you look at your risk profile, you look at what kind of income you're trying to achieve, and then you can kind of decide, do you want to take more risk for more income? Do you want to hedge some of it? Do you want to do more of a fixed income, a lower income product, but earn a little bit more over that fixed income? So we look at it for at least a Neos perspective that we want to have all these solutions out there. But for me personally, I do like Bitcoin. I think we're still in very early innings of it, and we'll continue to watch it grow. So it's an exciting product.
Why monthly income and not weekly? Weekly is becoming the big trend. And I feel like if Neos maybe launched a weekly income product, that you guys would take so much market share away from these ETF issuers. So why monthly and not weekly?
No, it's a good question. We've seen the trend where people have stopped paying their monthly and gone to paying it weekly. For us, I think it's, we could staff up a little more and push our administrator to kind of go to a weekly distribution. But I think right now, the way our products work, the way we roll our products, the way we bring in the income, makes sense to have it monthly right now. I'm not saying that couldn't change down the road, but I think for right now, it makes sense to be these monthly products, especially the high income ones where we roll monthly. A lot of those other products might be using zero DTE options or weeklies. It's a little different than what we're doing on most of our products.
NAV erosion. So there has been no NAV erosion with BTCI. In my opinion, one of the better products out there, or one of the best for Bitcoin exposure and high income. So the question is, why has there not been any NAV erosion, which is a great thing? And can investors expect this moving forward in your guys' product of BTCI?
So that's a good question. I think a lot of times you'll see NAV erosion in different funds when they over distribute. That doesn't have to be Bitcoin specific, it could be any asset class. So for us, we want to make sure that the total return can support the distribution over time. Obviously, since we launched in the middle of October last year, there's been a huge run in Bitcoin. I believe Bitcoin is up about 60% during that time frame, and BTCI is up around 50%. So capturing, call it 80+% of the upside of Bitcoin while still putting out that nice distribution on a monthly basis is the goal of this product. Of course, there will be times when Bitcoin moves lower. We know we've seen this in the past. It is a volatile, asset class, and during those times, we'll be sourcing all the income from the, from the option market. So there will be times where Bitcoin will be down, and we, in theory, should be outperforming Bitcoin because of the amount of premium we brought in. So when the Bitcoin's down on a month, we should outperform by the amount of premium we brought in that month. So we look at it as over time, we want to make sure that the distribution that's going out, this 28% as of the last distribution on an annualized basis, can be covered by the total return over time. So I think a lot of people will see these bigger, flashier kind of headline distribution numbers, wow, I could get that on a weekly or monthly basis. And on an annualized basis, that's huge. But I think you really need to dive in and do your homework when you're looking at products, whether it's Bitcoin, whether it's something on the NASDAQ 100 or the S&P, really dive in and understand, what are you purchasing? Is the distribution sustainable over time? Will there be NAV erosion if the overall total return can't keep up with that distribution? It's all important things to do your homework on.
So can you remind me in terms of the performance of BTCI versus the underlying? So in a down market of Bitcoin, BTCI should outperform Bitcoin, but how will it perform in a flat market and a upward trending market for Bitcoin compared to BTCI?
Sure. No, it's a great question. In a flat to down market, BTCI should outperform Bitcoin. So if Bitcoin's flat to down, we should outperform by the amount of premium we're bringing in on a monthly basis and keeping during the roll. So to give you an example, I think, just looking at numbers here, Bitcoin's up about 15% year to date total return, and BTCI is up about 17% year to date total return. So we're actually outperforming just because it's been a little volatile. We were down and then we rallied back. Bitcoin was down and rallied back. And I think during those time periods, we were able to bring in enough income to outperform and then continue to keep. Now, listen, if Bitcoin pops 30% next month, we're going to capture a good portion of that upside, but we're not going to capture all of it. Again, writing calls, you are capping yourself out and taking in premium, but giving away a lot of that upside. So it's something to keep an eye on. But right now, yes, in these flattish, and you say flat up 15%, but flattish to down markets for Bitcoin, we're currently outperforming year to date. But again, that could change in a day or a week as Bitcoin moves around.
How far out of the money are you guys writing the call options? And how much of the portfolio are you guys selling cover calls on?
Sure. So when we rolled at the end of last month, we sold calls on about 50%, so about half of the portfolio. And the calls were on average, if you blend them, around 13-14% out of the money between the two short calls. And so that gives us room up to that level to participate fully in theory. And then after that, the 50% that's not covered by the short calls should be able to continue to participate while the rest of it is kind of capped by the short calls.
Expense ratio, 0.98%. Now, investors might want to know, why not the famous 0.68% expense ratio, as I believe a lot of your other products are 0.68%, like SPYI, like QQQI. So, what goes into that expense ratio figure, and why 0.98%?
Sure. I think when you look at all of our expense ratios, we're as low as 38 basis points for CSHI. So that's one of our fixed income low vol products. We're as high as 98 basis points for BTCI. And then a lot of our products, like you said, fall in that 68 basis point range. A lot of our equity high income, our equity hedged products fall in that range. We look at it as we want to be competitive with the marketplace that's out there, but also for products like Bitcoin, for BTCI, there's a lot more work that goes into it than, say, an SPYI. While there's a ton of work that goes into that, and we find 68 basis points is kind of a good place for the market. For Bitcoin, we do have, like I mentioned earlier, when you're owning that 25% position, you're doing that through a different structure. You're doing that through what's called a CFC. It's a controlled foreign corporation that the fund owns. And having that separate entity takes time, a little more work on our trading team to implement things, to make sure things are settling properly. And then, of course, building the synthetic longs and then selling the calls, all a different process. And we also wanted to be competitive with other products that were out there. And it seemed to be the right spot to be just under that 1% mark.
Why hold HODL versus IBIT, ARCB, etc.?
And this could change. HODL is one of the lower cost expense ratio products, so we wanted to have that in there. If you kind of do a comp against all of them, they're all doing the same thing. They're all moving and following Bitcoin as they should. So for us, we wanted to get a low cost ETF within, or ETP within the ETF, to help out the fund there.
Competitors are a huge topic for investors, or should I say ETF CEOs, CIOs, and whatnot. So my question is, what does Neos believe is their main competitor for BTCI, and what makes BTCI different from your guys' competitors? Because I wouldn't compare BTCI at all to something like a yield max product because it's on a single stock like strategy. I wouldn't compare it to anything that has crypto exposure, like, for example, I said it once again, MSTR, Coinbase, and whatnot. I feel like BTCI is a very unique product in the fact that you actually hold Bitcoin as or exposure to it, right? So, what is your guys' main competitor, and what makes you guys different from those products? Maybe not name names, but maybe like a type of product.
Sure. No, there's some other products out there that try to do the same thing. There are some that have recently come out that, have honestly tried to mirror what we're trying to do. And I think for us, again, we're not so focused on who that competition is and what they're doing, or really, how they're managing their portfolio. I think as long as we're doing managing our portfolio to our rules-based systematic process, and we're managing it, according to the volatility of the underlying reference asset, being Bitcoin in this case, and we're making sure it's doing what it should do, that's what we focus on. We are honestly, we're now growing the firm. We're 26, 27 people. We're head down, from the portfolio management team on my side to the trading team to the sales and distribution and marketing team. Everybody's just focused on doing their thing. And, there are competitors in all of our products, whether it's Bitcoin, QQQI, SPYI, or some of the others. And for us, we really just focus on making sure that these products perform the best they can, put out the proper distribution for the, that the products can support. And in, some cases, do it as tax efficiently as possible to make sure that that end shareholder is getting the best net after tax distribution compared to the gross distribution. But yeah, there's a lot more competitors coming out in the space. And if you think about it, this ETF space, the option-based ETF space, has grown tremendously. There's now over 600 ETFs in the market that now have some kind of option-based strategy. And of course, there's a lot of buffered or defined outcome products, but there's a ton, as you know, as you look through it and do your research in this covered call space, or now in Bitcoin or some other alts.
Does BTCI have that famous, in my opinion, Neos tax efficiency because a lot of people love your guys' products for those index option exposure, Section 1256 contracts, lower taxes compared to other products. So I know in the beginning I might not have had index options as the benefit for tax efficiency, but does BTCI offer any sort of tax benefit, or should I say tax efficiency right now?
So right now, so you're correct. The index options were not used in the beginning when we launched because they weren't in the marketplace. It's a newer product that the CBO's Chicago Board of Options Exchange brought out recently, and we were, I believe, one of the first adopters to actually start using it, trading the index options. Right now, those index options, as far as I understand from the CBO, are not considered 1256 contracts. Whether that gets changed at some point, we'll have to wait and see, because we would like them to be, because of that tax efficiency where you get that 60-40 split, 60% long-term cap gains and 40% short-term cap gains from that 1256 contract. Right now, they're not. For us, we're still doing what we can on the tax loss harvesting side when we're rolling the options and everything we do in our other products. But again, it's always tough. The product, like we were saying earlier, is up 50% from inception. So to build that tax efficiency into it when we're not getting the 1256 contract treatment is definitely difficult. So it's more of a product that you have to wait to the end of the year to see what the actual 1099 looks like. We have the 1099 from last year showing what it was, and just because it was only out 2.5 months, it was all classified as ordinary income. So no true tax efficiency there, but it was a huge rally in the market for Bitcoin last year, and obviously for BTCI had some great returns last year.
Are you seeing your clients, or should I say maybe other retail investors, have investing in their portfolio with QQQI and SPYI? And are they also throwing in BTCI as well?
I think we've talked to a number of people that are using the NEOS products across the board. And since we have more and more products and more solutions in different categories, whether it's fixed income, treasuries, now alts, equities, hedged equities, they're using it because they could get access to the S&P 500 and bring income in an SPYI, or have a low vol, call it 1 to 3 month T-bill with CSHI. And so then some also will want a small exposure to Bitcoin, and that's where BTCI fits in. And I think in those scenarios, we've seen a lot of people using multiple ETFs, or telling us they use multiple ETFs to get access to these different markets and kind of blend their income and their risk profile to what they need it to be.
Do you have any tips for investors who want to invest in BTCI or already have BTCI that want to get the best total returns possible? Now, before you answer, I know the obvious answer is to always drip or reinvest the income, but it gets more complicated than that, because some investors automatically drip the income received from BTCI the minute they get it in their account. Some investors also wait for BTCI to drop from Bitcoin having some bad performance. Maybe they get a better price in on BTCI, so they'll get the income in their account, wait for some weakness, reinvest the income at that time. Or some of them would just, I guess, use that income from BTCI to fuel other positions, just like SPYI, like QQQI. So it's super interesting on how investors are using the income from BTCI, because it has a super high yield that's been reliable, I guess, consistent. And they're not maybe investing it all back into BTCI, but they're fueling other products that Neos has, like a QQQI, like a SPYI. So, what are your thoughts if you were to get that income? How would you invest it to get the best total returns?
So it's a tough question when you're thinking about it. But yes, I have heard and I have seen a lot of people, whether it's BTCI or owning one of the other products, taking the distribution and reinvesting into a different product that is a NEOS product. So we have a number of people that have been holding SPYI for a long time and like that, call it 12% annualized distribution. And they've been taking that and reinvesting it and buying something like Bitcoin, or some we've heard recently with our new gold product, IAUI, taking it and starting to start a position there. So instead of pulling or selling part of your position somewhere else, they're taking that distribution and adding new or reallocating to other positions. So it's definitely something we've heard. It's something that, I've definitely done as I've seen that distribution come off of BTCI, reallocate maybe to one of the other ETFs that's a little underweighted for how I want my portfolio to look. So it's every portfolio, every client is different, and their goals are different. What kind of income they might want? Do they need the income? What kind of goals they have? Is this 5 years down the road? Is it 20 years down the road? So it's different for everybody, but I think having more product out there for us at Neos has been something we've been pushing for. Brought out about 3 products this year. We're pushing to get more out throughout the second half of the year. So, and like I said, there's so many products out there now. And I think the most important thing that people can do is just do their homework, whether it's coming to a channel like this and learning about these products, whether it's digging in on some of the different various websites that are out there and understanding what are you holding, what is your exposure, are they over distributing, can that distribution be supported over time, and really importantly, what does the tax efficiency look like in the end? As you were talking about earlier, what does it look like in the end when you're holding 2 competitor products? How does it differ if you're using those index options like we use in a lot of our products versus somebody else using ETF options or equity linked notes in some of the bigger products? So it's very important to understand that piece and then make your decision on which products in that category you're going to invest in.
What's in the pipeline for Neos on any new products that you guys have? And some of my subscribers asked if Neos will ever release a broader based crypto income fund. I don't know if they mean a fund that has maybe Ethereum, maybe XRP, some Bitcoin, etc. So are there any new products based on crypto up on the deck soon, or maybe even other products that you are excited about that is going to be released soon by Neos?
So we mentioned that we just released our gold high income product. That's IAUI. So very excited about that one and launching that a couple of weeks ago. We did just file a prospectus, which is out there for the Neos International High Income ETF. So really excited about that. That hopefully will come out sometime in the early fall. We have a few others that we haven't filed yet, so we can't talk about them. But to answer your question, we have looked to doing possibly more crypto, possibly more commodity stuff. It really depends on how we can get those structured and get those out to the market. So we have like we said, we have 12 ETFs out now. The goal, maybe we get another 3 or 4 out throughout the end of the year. We're not an issuer that brings out a ton of ETFs at a time and kind of throws stuff out there to see what might stick. We really strategically bring out one ETF at a time to support it when there's a demand for it and it makes sense for us, and really build up that ETF as we start to roll into what we have coming down the pipe. But we have a list of things we want to get out. But next one is the International High Income ETF.
Now, what are your favorite Neos products? Because you invest in all your guys' products that isn't BTCI, that isn't SPYI, and not QQQI. And a follow-up question is, why do investors love Neos products so much? I've never gotten one bad comment about Neos. And I would like to say, pat on the back for me, that I think I was one of the first YouTubers to really cover Neos. And now it seems like every investor is covering Neos, or YouTubers covering Neos like it's candy. But let's go back to the question, your favorite ETFs by Neos and why investors and your clients love your guys' products.
Well, it's always tough to pick my favorite. You did mention QQQI. That is, for me, my largest holding for me. But I love, I do love our fixed income suite. And I think, a lot of people focus towards the equity high income or now the alts, whether it's real estate, gold, or Bitcoin. But our fixed income suite has some really nice products that give you an enhanced income because it's sourced from the S&P 500. So we're sourcing the volatility of the equity markets to bring income on top of a fixed income product. And so whether it's our high yield product in HYBI or our aggregate bond product in BNDI, you're getting this enhanced income, but with a similar standard deviation to the underlying reference asset. So when you think about it, you could have the same volatility as you would by just owning an aggregate bond ETF. But when BNDI, you're getting additional income on top of that, and you're enhancing your income by anywhere from 2 to 2.5% over time. And that 2 to 2.5%, when you're thinking about what the aggregate bond market is putting out, call it 3.75, is a huge percentage jump, and is meaningful to people that want to be in these lower vol products and earn some extra income. So that suite is something that we really focus on, and I think that'll continue to grow.
Is what's the number one thing that investors are not talking about with BTCI right now compared to other products that have Bitcoin exposure, maybe exposure to MSTR, leverage exposure, high yield? But let's go back to the question. The number one thing that you think people are not talking about with BTCI?
I think with BTCI, as people look at the product and they look at the competitor landscape, whether it's solely focused on Bitcoin or maybe some of these other ones that you mentioned, I think they really need to think about what they want to own. Do they want straight Bitcoin exposure? Then that's a different product than BTCI. But if they want to earn income and they don't want to be, over time have a NAV erosion because they're being over distributed, their income, it's a product that I think can work for a lot of people. It's not for everyone because the risk profile, like you said earlier, Bitcoin inherently is a riskier product. That's why the volatility is higher, so you can earn more income off the options market. But for us, I think it's a product that really fits into that alternative sleeve that we continue to grow, as we were saying earlier, with gold, with real estate. And I think a lot of people can look at Bitcoin and say, I can have some exposure, I can earn some income. And, there's a few other products out there, but, of course, we prefer the NEOS products. And thank you for being one of the early YouTube influencers out there talking about our products and really championing them, because I think as you dive deep into some of these products and really understand how they work, it's important to get the education out there. There's so many products out there, and I think it's more important now than ever for people to understand what they're investing in.
Now, you guys heard it first here, folks, from Mr. Troy Cates, the co-founder and managing partner of the one and only NEOS Investments. Now, thank you so much, Troy, for being on the channel. If you guys like this video, please give it a like because this cute puppy did. And check out right here our last discussion about your guys' favorite index ETFs for income, that of SPYI and QQQI, on a prior interview we did with Troy Cates and NEOS. Love you guys so much. Crushing the stock market, and take it easy. Peace.